Hey everybody, Justin Schlegel with RE/MAX Preferred Choice. Today's February 25th, 2014, and this is a real estate market update. I need you to remember, real estate is local, so your home's condition, the neighborhood, the city, that's all going to affect the local market conditions. I'd be glad to explain that to you on an individual basis. We're talking in generalities right now. So the market's certainly changed since this time last year. Right now we don't necessarily have an oversupply issue, it's a lack of demand. In fact, we're 78% of where a normal demand would be this time of year. So obviously almost a quarter off the pace, and that plays a huge role. There's a number of reasons for that. You've got less investor opportunities because as prices have rose and rents have stayed the same, that's not nearly as attractive. The out-of-state buyers are down for a couple of reasons, but perception, and that can play a role in politics too. Obviously, with some legislation out there that's maybe controversial, we'll say, that certainly is giving an impression that many don't want to come and live here. You've got the Canadian dollar has been a little bit weaker over the past year or so, and you've got a lot of pent-up demand from people that had a short sale or foreclosure over the last several years that we thought would re-enter the market right away, and they just haven't. So maybe it's still that bad taste in their mouth, or maybe they've got some other credit issues they're dealing with. Just don't know in that regard. The millennial generation, that also plays a role. They tend to want to live closer to downtown, more urban. So the Buckeye Surprise, those suburban communities, those are having a hard time right now getting going, and we're seeing a true buyer's market in those areas. Millennials also are saddled with student loan debt. They're living at home longer. They're having children later in life. So, it's just a generational difference that things are changing. Prices, we came up 62% over the past 2.5 years. And, every once in a while you got to have a market reset, whether it's the stock market or the real estate market. And this is one of those times where, we got a little excited, and now we need to just, calm down, and we've got a healthy market ahead of us. But we got to be realistic, and sellers need to be realistic when selling. I mean, their option is either to wait until the buyer comes along because of a buyer demand issue, or they can drop the price to try to entice other buyers to look at the home. So as long as it's being marketed, then it really gets down to price or just waiting. And even if priced right, it may still take a little bit of time to get homes sold. Again, on the perception thing, some buyers think that homes are too high priced right now, and buyers do have the ability to negotiate for concessions and on price. So it's something that sellers need to be aware of. New home sales make up roughly 10 to 15% of our market. That is lower than historical averages. In January was actually the lowest number of new home sales closed in over 2 years. So that market's kind of stumbling as well. And then the number of pending sales overall. Over the last 4 years, year over year, month over month type of deal, we've went down in pending sales. So, the demand just isn't there right now. So it's about setting the right expectations up front. I'm glad to answer any questions you've got. Please don't hesitate. That's what I do. That's what I'm here for. So a lot of this information comes from, of course, the MLS, some of my own statistics, as well as the Cromford Report. And Michael Lohr actually sat through a presentation of his this morning. So and he directs the real estate program out at ASU. So good, relevant information for you to know. Any questions, again, don't hesitate. Numbers down below. Otherwise, have a great week, and let's talk soon.